Good morning and welcome to the Breakfast Club. We are live here on September 29th, 2023 on a Friday. It's now 7:11 in the morning here in Canada, and we're looking for a little bit of reaction today. I like this, the way the market's looking a bit today. So let's look at, we'll start over here at British Pound, and then we'll work our way all the way through the markets. British pound, look at that. It's doing exactly what I was calling for beginning of the week. So, well, 3 days ago. We're looking at this bottoming out, and I'm not saying this is how you call the bottoms. I'll tell you that right now, because you can't call the bottoms in the market with any degree of accuracy. This was the thing I was looking at, saying, well, we've been going down for a while here. Now it would be nice to see a return. Here's a great opportunity to turn here. So on the daily, British pound, the bodies respected that fair value gap on the daily quite well, flipped up. We didn't even come back to it as an inversion gap. We're just rocketing up to this area of interest, I would like to call it. This SIBI sitting right here, looking at the bottom of this order block here. This is a breaker. Last down close candle before a run above old highs. Parent breaker of this big long run up. So I like this upper zone for the British pound. So now that we've got above this little SIBI here, this becomes the inversion fair value gap on the daily. So look for a possible return to if you're into the British pound. Right there. Look for a return back to that inversion fair value gap. I'd like to see it actually come back, tag the top of this one right here. So you're probably looking around, 122-ish. Oh, I don't want to mess with my little button there. Don't you all think I've been manipulating that thing? Just go back in the videos, you'll see I've been calling this right on top of that guy there. So 122, 246. Check your broker's feed. It may be slightly different, but look for the candle on the yesterday's high and this inversion gap. Look for that area to get your entry in to go up here. Unless it runs that today, then don't bother. Wait. Then we're looking for support on the downside to get back to the between these two. And on the daily, that's a nice, fairly decent hunk of chunks or a hunk of tip pippies here. That's 96 pips. That's a nice haul for a week. So that's the British pound. That's on the daily. Let's go down to the hourly, see if there's an opportunity right there. Look at that. Nice. Upside objective. Oh, see? Here's that inversion fair value gap. Look how it hit nicely. Body breaks through, comes back down, hits the top of it perfectly. If I was watching that on the hourly, that's exactly where I would have been in on to get long. Perfect entry in line with that candle, which is what I'm trying to show you. Go back to the daily, you'll see what I mean. When this one comes back down, you want to see it line up with that one there, which is exactly what we're looking at when we look for that breakthrough, come back down, tag the top of it, continue through. So a few hours ago, that was worth 40 pips. If you're aiming for the central point of this breaker here, which is the mean threshold. Not much there other than rejection. We came to the rejection block, hit the rejection block and peaked off. Where am I getting these words from today? I just woke up. Wait, let me have a sip of coffee. Ah, yeah, the coffee. I will start to think clearer, I'm sure. All right, we have nobody in the Breakfast Club yet. I'm going to send a link out there so that people can just pop in on Skype and have a chat if you need to have a one-on-one chat. I'm available on Skype. We'll see if anybody's interested in taking me up on that offer. Let me go back here, make sure everything's lined up with the live read. Yep, looks like we're going good there. And let me just manage this. Settings. YouTube Studio. Content. I'll put one of these little thumbnails so people know what we're doing here. Okay. And I'm just going to run down. I got some, I'm just sorry, a little bit of administrative stuff. I should probably have done this stuff before I got on here. Let me just get this done. A couple of seconds. Come back. Now anybody who's interested in having a peek in here, using some keywords, put some tags in there, paste it, save it. Alright, so now anybody who's putting in some keywords this morning will be able to pop in if they like. Alright. Alright, now we're live. Okay. Alright, so the next thing we're looking for here is the euro dollar. Let's look at the daily here. See, euro dollar's not as crisp and clean as the GBP was, the pound. So we're inside. We've gone through this inversion, this fair value gap. Now we want this to become the new inversion gap if we want to push through. We have no break-in structure in the euro dollar, so don't sweat that. In terms of break, we're heading back up. We're still in a serious downward trend since July, my birthday. Since July all the way down. So no break-in structure yet. What do we got over here? Look at this over here. Inversion fair value gap here. So we've got, cut through all this stuff and look here. That would be, what price is that? That's 106.36. Okay, back to the order block. So look for this to continue up to the new week opening gap again. We got a little tiny fair value gap there. We've already busted through it with a wick. So if we come through again, get a little bit of support, look for that for the last couple of pips out of the day, which is 30 pips. We may get, oh, this is daily, so you won't get any return on this till next week. If we do get a return, we're looking for it to get on top of this thing and start pushing up back into the new week opening gap. If not, this should be running up higher. We have a breaking market structure here, breaking structure here on the short term. Remember, just short term, because we're looking to go back up to that new week opening gap anyway. So let's see how this consolidation, we have a breaking structure. We break up and we get above this right here. This is that fair value gap. We went all the way through it, creating our own fair value gap, and we come back into it. We were chatting about this yesterday. Comes back in, finds support, and then left. And what a great run. Didn't take it yesterday, but always got to stay positive, think positive, don't beat yourself up. We did an excellent call yesterday. I did an excellent call yesterday. I like to say we. I don't know. It's not a pronoun I use, but I tend to use it all the time. So, because I like to be inclusive. I like to make sure everybody's part of it. We're all part of a team here. I think that comes from my paramedic or my firefighting background. We are a team. When we come to a call, We're the ones that make it happen. I'm not the one. We save lives, not me save lives. So I've always kind of looked at it, and I've always played on teams, a couple of little individual sports and stuff. I love the racket sports. So I've always kind of looked at it as an inclusive part, where I'm a part of a team. So we maybe I'll have to include Michael in here. No, he'd hate that if I did that. Yeah, I learned all this stuff from Michael Huddleston, our ICT, back in 2016. I was one of his original 800. And I've been with him every step of the way, tweets and all, or X. Now it's called X. I've been watching this guy. I've been making the mistakes he says not to do. I tested it. I was the worst kind of learner. I've actually paid for my education. I used live money when I shouldn't have, and that creates a lot of fear, a lot of doubt. It's exactly what he says. If you don't listen, then you're spending a lot of time trying to recover from the very financial trauma that you expected. So now that I've recovered from that, the financial side, it's trying to cover back from the psychological side. So there's always a bit of a journey. I'm not always going to get this right, but I will try to follow the rules as much as possible and try to teach those rules here today. And every day I'm on the channel, and anybody who pops in and sees that, you're welcome to participate and share your thoughts, share your ideas. We'll kind of talk through it. If you see a trade that you like, or you think it's setting up, don't be afraid to ask. That's what we're all about here, is inclusiveness and collaboration. And I use these kind of cool words because my wife's a teacher. So this is important for people to be able to share ideas, and there's no ego here. If you got an idea, let's talk it through and see if we can't see a decent trade setup based on what Michael's taught over the decades that he's been around, from baby pips back in the 90s all the way till now. You've got him till November, so I encourage you to follow along with him. Go to his channel if you haven't studied ICT concepts. And you're interested in the market. It's an absolute must for technical analysis. If you want to get into fundamentals, he doesn't talk fundamentals. He talks technical, and he talks algo. Whether you believe it or not, do yourself a favor, go listen to his stuff. Study his stuff. And when you come back here, you're more than welcome to practice, employ, try it, and ask questions. Ask somebody who's been here, doing it for a while. And if I'm your choice, great. There's plenty of other people out there that really know his stuff, that are in funded accounts, that are making mucho bucks. So they got lots to pick from, and it won't be long until they've come up with an AI that's figured out all this stuff and built bots around it. I do have a bot that I've developed. It's called the Alpha Wolf, Fear the Alpha Wolf, or the Hedgehog bot, because I can hedge with this, and I can do a whole ton of things with this bot. Buy and sell, can hold trades over certain periods of time. There's lots of things I can do with this. So I will use the bot when I see an opportunity, usually around the minute. It's not a perfect bot by any stretch, because the more the spread, the less reliable it is down on these lower time frames. It would be more reliable on the higher time frames, which I can adapt it to, because that spread, the important thing is the spread. So yeah, so let's get back to this analysis. So euro, we're looking for that to return down into this inversion fair value gap now. We're just hitting the top of it. Do we come in here and tag this little piece, this BISI here? and then continue pushing up? Or are we going to drop all the way down into this area today? Like, is this the high? Don't know. So let's look at you can look for things like the range first. And we're just coming up for the open. So look at that. 62% comes right into the middle of that inversion fair value gap on the higher time frame. 62% comes into a discount. 50% it's already tapped off of. Come back into this small little range here. This is your optimum trade entry. All the way down into here, which is 79%. So keep an eye on this. Do we get a reaction off of that? And then do we eat through the threshold of this candle? Do we get on top of that little tiny fair value gap there? Get a little support? Get on top of this inversion? Create this as an inversion fair value gap? Get on top of that and continue pushing up for higher prices for the rest of the day. Sorry, the washing machine's on. I hope it's not translating too much into the mic. My office is near the laundry room here, so apologize for that. Just sounds like I'm doing this in the shower. Anyway, I'm going to leave that on there just so you can kind of keep an eye on that. This is one of those ones we'll look back and say, oh, look at that optimum entry, we missed it. The pound, okay, the pound's coming back. Look for that inversion fair value gap again to get into there. Natural gas. Look at that. That natural gas is painful, man. Daily, up and down, up and down. But it's just slow and insidious grind up. And you trough people love this stuff. This retail people, they love all this stuff. Look at that. It's not super accurate, but because theirs is, they've got more specific criteria they like to bounce these things off of. But that's pretty much the idea of what they like to think of as a trough. As long as you're staying inside the trough until it breaks the trend line. And I know they've got some rules about if it breaks the trend line, trades back to the trend line and continues down. Some people like to use that, but I have no idea. I'm so glad I got into this whole stuff back in 2016. I had no idea. I didn't even know what Forex stood for. Someone said Forex. I was like, what? And then he said cable. I thought, oh, okay, I got to get cable. Yeah, I've got cable at home. I'm subscribed to cable. And then he mentioned something about fiber. I'm like, fiber? I gotta eat more fiber. So I decided to get more fiber in my diet. And then I realized that cable and fiber were British pound and euro. That's how naive I was, folks. That's how naive I was when it came to the the Forex market. Didn't know what Forex stood for until I found out foreign exchange. Oh, well, there you go. So the naivete to which I brought to the market back in 2016 was as green as you could be. I was the seed in the ground. I wasn't even green grass, man. I was completely new to this whole market. And a buddy of mine introduced me to it. Got interested in Michael's stuff way back then, and absolutely captivated by what he was teaching. And I went straight into the I'm gonna throw my live money at this thing. So our mentorship started in August. By September I was going live. That's how ridiculous it was. And then I pretty much stayed live through the whole 5-6 years. Blew a whole bunch of accounts, like thousands of dollars. And then you had to literally tie it, rein it in, and find out, hey, look, this stuff does work. And it wasn't until you started to see it and started going back to a demo account. And then I blew a whole bunch of demo accounts and realized that it wasn't the technique. It was the impulsiveness, the desire. I had so many dreams. I was going to take care of the family. I was going to take them on vacations. I was going to do all these things. I was going to help people. I was going to build this. I was going to build that for people because I just wanted to help contribute. That was the paramedic firefighter side of me, is just I wanted to be part of something bigger and help create something bigger for people. And in the end, I just kept blowing accounts, and then you start getting down on yourself. You're running into the depression side. Then you got to try and deal with all that and trading at the same time. Well, that's a nightmare. Then I ended up suffering a big injury at work, a career-ending injury. Went through 4 spine surgeries. I don't know why I'm telling you guys all this. Been through 4 spine surgeries, fusions. Flew to another country, got spine surgeries. It's crazy. I got an interesting story. But you're not here for that. Let me get back to this Australian dollar. Look at that. It hit that little spot we talked about 1, 2, 3, 4 days ago. I was saying they're not going to leave that untouched. Well, they didn't. They didn't leave this equal lows untouched either. They drove through that. And yesterday and today, they're pushing back through it. So are we coming back into a consolidation? Who knows? So don't get too hyped up crazy over it. Here's an interesting thing. Look at that order block on the daily. Just a basic order block that as we come up, we have the high. As soon as the high is broken right there, we come back. Look at that. Ding. Tags it nicely today. And we've left out. So if we get a break in structure above here with a body, I like a body getting above that. Look for this consolidation to come back to the high. And then perhaps 50% of that, or sometimes somewhere inside here. I want to see this create a breakaway gap here. So have it push, create a little fair value gap, come back, trade inside it next week, and then push for higher prices above these equal highs right here. So there's a nice little pocket of cash up there at 65. We'll get a run back up. Then I'm looking for a run back down into that fair value gap. October, November, you might get a run around in here. Then I want to see it come back into that pocket or this range here. This would be the breaker that you'd be looking for it to come back into, maybe in October-ish, or sorry, November, December-ish, because that's when we usually get a big run. Now, we could have this, like we did here, October. See how this is like October of last year? Look at that. It's the steady run all the way up until January this year. So the whole year ran right up, and now we've just hit another big low. This was the low of 63.30, and this is 61. So 63.30 is right in here. So we finished filling in this guy here, 63.73 order block, 63.40 threshold, 63.18. That would be the threshold, the mean threshold of the down close candle here. So we've traded back into this order block or breaker, down close candle, runs above an old high, and now we're reacting off of it. So is this the new run all the way back up to equal highs? Who knows? Who knows? Only the shadow knows. So what we're looking for is a break above here. Get back into this and look for higher prices. So we're just looking for a breakout above this thing here for the next few weeks. This could be the pre-swing of October low, the seasonal tendency right now. That's it. Could be it. Could be it. Who knows? Let's wait and see. Now, if you're looking at this as a 1 minute candle, we're looking for an opportunity to create a fair value gap. There's to create a breakaway gap, and then look for more higher prices. So it's on the daily, so you have to wait a week before you see any of that setup starting to happen. So that is Australian dollar. Look at this New Zealand dollar, nice and crisp. Never did come back there. I don't know if they want to leave that untouched. So is this a big run up into here? I want to see. Now that we've broken above this high, I want to see a fair value gap form in here, breakaway gap. So Monday, create the fair value gap. Tuesday, come back and tag it. Tuesday will be the low, also return to the high, also inside this fair value gap SIBI, and then get on top of it. Because if we get on top of this, we get through this thing, then I'm more bullish for a run into 50% of this range. That's what I'm kind of looking at for New Zealand dollar. So on the daily, who said it? Morning, brother. How's it going? Where are the wolves going to eat this morning? All right. We're just talking about this whole kind of setup here happening on the New Zealand dollar. Yeah, that's a big return. Let me go give you something that looks like it's we're through that inversion gap. All right. We have new week opening gap. Look at that, it's just coming down, tagging that new week opening gap. When you set up your charts, always set this up. The beginning of every trade week, put a high and a low. So last week's Friday's close and Sunday's open. You put Friday's close, Sunday's open, depending on which one that is. And then I like to put a dotted line in the middle just to kind of break it up and give you that idea of this is what the new week opening gap looks like. And my OCD wants that to come down a little bit more. There we go. And always, if you're using this MT5, make sure you double click it, because if you tap on it anywhere, you'll pull it out of control. And then you have to go back and say, which new week opening gap was this? And you have to hunt through it. And then you'll realize that, oh yeah, it was over here somewhere. 25, 22, right here. It wasn't even that one. It was this one. This one is this week's. This one is another week ago or 2 weeks ago. So several ways you can do it. One is you can either build you can start, let's say, from here. Let's say that was the opening. You can pull this way and then hit the shift bar and hold onto the shift bar, and that keeps it straight for you. And you can just kind of keep extending it every day. That way, when you go back to the beginning, you'll know what week this one actually represents. Right now, I don't know what that one is. That could have been a month, 2 months ago. Who knows? But you got to keep them at least for 2 months. So if you start like this and pull forward, just remember you've got to keep pulling it forward every morning, which would probably be a better way of doing it. But I'm kind of lazy. I like to set it up and let it run all the way through. So anyway, let's look at this one right here. This pocket right here, this inversion, fair value gap, BISI on the oil. Oops, I grabbed the wrong one. So that ends up lining up with the bottom of the new week opening gap. So this is an area of sensitivity. Look for this to provide some measure of support. We can dip right into it, rebalance the BISI on this side, and then we can reversal. So look at the large range top to bottom and say, now we are trading internal range liquidity. So we're looking for, that's our range that we're trading in, and we have a premium and discount range. So if we were at a premium, we want to bring price back down to a discount. Look at that, how it was just banging around on 50% for a while. And we're looking for it to return to an area of, oh, look at that, 62% actually fills the rest of our fair value gap here. So 62% retracement would be a great opportunity for smart money to get back into offsetting their short positions and loading up to go long again. So they've built a book down here for the last few hours or since the opening, and now we're cleaning them out. So look for a return into here, 62%, and we'll see if we get a reaction off of that, because we do have a chunk of order block we can run into. So 10 o'clock, do we have a bounce off spot? Do we run these, hit this objective for 10 o'clock, and then look for that fair value gap or silver bullet entry to get long and get back into this big open SIB here? Does that make sense? So we'll keep an eye on that one. Gold. Oh, this one back here. This one was the one we were talking about the other day when I was calling the low 3 days ago when we were here, calling the bottom here, and then run back up into this area here. So we're looking for a return back into this. If you're trading Forex, because I know how you might stay out of today's silver bullet because the double news comes out at 9:45. Then might be choppy. True. You gotta be really careful about trading on a Friday. Really, really careful about trading Fridays. And we're coming. It's next week is our non-farm payroll. So yeah, look for this little area here on the downside. It's easy to sit there and just go, if you're ever in doubt, never trade if you're in doubt. It definitely doesn't serve you. So just wait till there's a high probability of certainty that you're comfortable with your trade. So that little pocket right there, look for this one here on the British pound. We're coming back inside this inversion fair value gap now. Anywhere inside here, we're looking for support, or does it drive all the way through into here? Now, does that area provide support, or do we continue on the downside? Because we just keyed off the rejection block up here. But I think this got more upside. But we'll see how it reacts inside here. And you got 15 more minutes left to go. The gold for today. Gold has come down right off of that. Is this a gray one? Oh, yeah, that's a weekly, isn't it? Yeah. It's keyed off the top of this weekly fair value gap here. See how it came down and tagged the top of it? Oh, here's the inversion fair value gap. That's what it keyed off of, not here. So it came into that fair value gap. Let me make this a little bigger. There is the weekly fair value gap. This is also a weekly BISI that is now an inversion fair value gap. So this is a BISI that hasn't been filled yet. And this is a BISI that has actually now become, because it's been filled, an inversion fair value gap. See how we broke through the body, broke through the top of it, and then the next week we opened, traded down to it, and then left with force for that old high. Beautiful, beautiful price delivery right there. Created another little tiny fair value gap, which we've now traded into the midpoint of it. Or did we bottom out on that? What's the low on that? The low is 1857.69. A high is 1856.31. So it's just a few, like $1 short of that objective. But it is right there, 1865.10. So we're just short of tapping this one. Yeah, I think we're just short of tapping that one. And we're just inside this guy here. So this pullback now, does this level here provide us some support? Do we, on the lower time frames, now if we come back up to here, do we get some support and continue pushing down? So go to the daily and have a look there. So there's the daily. It's tapped in the bottom of it, came back up right inside that. So here's a good pullback, breaking structure to the downside, create a fair value gap, trade back up to it. Whilst I was talking today, here was a good opportunity to get short right there. Again, stop losses to go up there, guys. You know, you want to get above this breaker or at least above here, because if you're wrong, you want to keep your leverage super tight. But if you're good, yeah, that 1888, which is the bottom of that breaker, mitigation. That's a mitigation block. Last down close candle that does not break any old highs. Mitigation. We didn't even get up to mitigation. So, who said I've never traded oil, so don't know if thing about it or how it trades, etc. I usually stick to Euro, GBP, gold, and Nasdaq. Outside of those, I'm iffy. Friday, last day of the month, and double news day. Might just paper trade. Good idea. Yep, nothing wrong with paper trading. And always remember that the algo is the algo. It doesn't matter. This, what you're seeing here, is no different than anything else that you trade. Some people say you get a feel for it. I'm not a big fan of Canadian dollar. I don't like the way it reacts. But if you're trading oil, just know that you're gonna, whatever you put on, it's gonna grow quickly or crash quickly, because you got to really keep your leverage low. That has wider spreads, so when it runs, it can run 100, 200 pips, like $1, $2, sometimes even $5 to $10 in a day. It can go up, so you can actually capitalize on massive profits. Or if your stop loss is not tight, you're going to get eaten up fast with oil. So it moves quickly and it moves big volume. So if you like oil, or if you like to make money off of some good certainty, if you see a good certain, like a break in structure with a fair value gap, breaker inside it, hit it, oil's a great place to make a big ton of money real quick. It's the same algo that drives everything, drives the whole markets. But you're right, each one of them does have its own feel. But the setups are exactly the same. I love trading oil. I was trading euro for a while, then I went over to oil, and then when you start getting into the S&P 500, I thought I was going to get my ass kicked because it's such a high. Like, this is $1,900 for gold. Gold moves some big volume too. And the S&P 500, oh, look at that. I had that marked off here. That's the entry to go long. Where are we sitting at? 10 minutes too? Well, I might be getting down to the S&P here. Damn, it hit my level. Should have put an alarm. Yeah, I like the slower movement stuff at the moment so I can figure out what's going on, since it's still new to ICT. Yes. The slower stuff, that's the place to be. When you're practicing, you're starting out, get the stuff that's moving. Stay in the time frames that support lower thinking. I should say lower thinking, sorry. Slower thinking, because while you're trying to get to your bearings with all this concepts, because let's face it, ICT has a ton of content. It's a ton of content. What you can see me trading is like 1 minute stuff, but you'll get an idea of what it is I'm looking for, and you'll be looking for that on a higher time frame stuff, which is slower, and it's a fractal thing. So whatever you see me doing on the 1 minute does the same thing on 2, 4, all the way through on the month. I'm basing everything that you'll see me trading on a 1 minute, you'll see all the way up to a month. So you can slow down as fast or as slow as you want anywhere inside your time frames. So let's look in here. I like this right here. There we go. So euro, was talking about euro earlier. There's your inversion fair value gap. So we're into that right now. So 75% optimum trade entry. I like this piece down in here, 79%. So keep your eye on this area here for 10 o'clock. They run these lows out and then the reversal. So keep your eye, if you're looking at euro there, who said it? Look for your some support in here. Does this provide a level of support from the bottom, from the top here of this BISI to the bottom? Don't forget you have the 4 levels, 75, 50, 25, and the close. And we may have already got that. What's the low here? The low is 57.47. What's the low here? 57.42. So we're right close to this here already. So if this pushes one more time down into here, and we still got 8 minutes before the 10 o'clock open, this would be a great place for it to reverse. So just kind of keep that in mind when you're looking at that. For euro dollar, one more left to go is the tech. Oh, look at that. Beautiful. So a few hours ago, this would have been nice to get in on. There's the old equal highs. We have a breakout, body gets above, creates a fair value gap here, come back inside the fair value gap. Now we're getting long, aiming for high, high, high. So perfect entries, just not awake at that time of day. That was 14, so 2 hours ago. I was not up at 5:40 something in the morning. 5 o'clock, nope. Wasn't available, but you're night shifting, man. The night shifter, who said it? If you were night shifting that coming home a few hours ago, that would be a great opportunity to see that one, especially during London. That's the 9, 10, 11. Return right inside that fair value gap. Man, that would have been a nice little pop-up. Let me get this out of the way here. All right, so now we're getting above here. Body gets above there, so we're looking for a return back into here to get long some more. That's on the tech. So we have, see how this is nice and even, right? We had a run. They have this little consolidation. We run the consolidation on the downside, then come back up, clean out the top guys again, come back down, rebalance price on this BISI, and then break out. This creates a breakaway gap above an old high. So we have a breaking structure to the upside, return down to the top of this consolidation. Top, I've mentioned this multiple times before, the high and the 50% of that range are the key levels you're looking for inside the consolidation. So it hit the top of it and we are off to the races. And we have multiple, we have a propulsion candle, come back down, fair value gap, and order blocks. Now, if we're looking at this for, here's another little new piece of, well, not new, those of you who have already studied Michael's stuff. You're looking at price legs. I like a nice sexy price leg too. Let's put that up there as an area of interest for the day. This creates a new price leg up inside of our value gap. I like it. So 14, 930, 13. So that's another 43 handles up. And what does that line up with? Look at that. Bottom of the fair value, or I keep saying fair value. Bottom of the order block breaker right here. Last up close candle before run below the lows. And boom, there you go. So this guy here, right to the bottom of it, looks like the price leg going up. Okay, Friday last. Okay, did you see the euro yesterday hit our original target around noon? Yes, yes, yes. Right there. Hit it. Come back down inside the fair value gap. Never returned back to any other of these inversion fair value gaps. We broke above it, came back down. Now we're on top of it. We want to see this provide a level of support if you want to start pushing up so it can come all the way back down. You don't like it to see it eat all the way through it like this. It's not usually a good sign, but there's an objective down here for 10 o'clock. We have 4 more minutes. Yeah, I like the slower movement stuff at the moment so I can figure out what's going on since it's still new ICT parts. Yeah, at 7 a.m. Eastern time, I'm driving home. Ugh, so that sucks because you can't catch those either, but that's okay. There's plenty of other opportunities. I caught the Euro USD silverboard at London for 15 pips. Ooh! Brother, you go, man. That's good. Good for you. 15 pips in the pocket. Like my friend says, if you saw a dollar bill sitting on the ground, you wouldn't step over it. Pick it up. Pick it up. All right, I'm going to get that out of the way because we know we're in an optimum trade entry now. So look, all the way back down. So just pop in here. Pop in here, and then we'll take a little long right there. So you got to get down to the 1 minute to look for that. What am I looking for here? Doodaloo, 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 doodaloo. Right there. Right there. Keep your eyes on the prize. That 950 spike down was a liquidity grab, you would say, right? 950. This one? You're talking about this guy right here, right? This 950 liquidity grab. Well, it hasn't really grabbed any. See how it's just made an equal low now because we've come down to the edge of it. This creates this equal low. This was a quick liquidity grab before it ran back up. But see, look at all this. There's a ton of liquidity all sitting down in here. Like, look at all this stuff. All the way across there, down to here. So this isn't a liquidity grab just yet. To me, this is one of those, I'm extending price down. I come back up inside the fair value gap, continue down. So keep your eye on this area here, my friend, and see if you see anything else there. Read your bio. You're on Michael's first 8. I read your bio. You're one of Michael's first 800 students. That's crazy. How did you find out about it? I just came across him about 1.5, 2 months ago. Really? Yeah, my buddy was into, we were doing some paramedic stuff up on the oil patch. And he said, hey, look, man, there's this guy that does this trading. And he's teaching a course on how to trade. The guy's amazing. I was like, oh, yeah, I had some money. I was like, sure, I'll throw it at it. I was like, how much was it? He says, it's about $150. I said, a month? He says, yeah. I was like, fuck, I don't know. I love education. I've been teaching. I had my own business teaching. I've been teaching emergency services, medical stuff. I've been at EMS conferences. I developed my own escape seminar, self-defense for EMS and emergency services providers. I'd go to my buddy Ray Dugray and I used to go to conferences and teach this kind of stuff. Anyway, I met this guy and he says, hey, you got to try this one. I'm like, oh, great. I'm in for learning. And I literally started learning ICT stuff in August of 2016. I had no freaking clue. It was $150 a month. It was still $150 a month. And I had no clue I didn't know what Forex stood for. I didn't know what cable, fiber. When I heard cable, I thought, I got to get cable. Okay, I can get cable. I've already got cable. I've got fiber optic cable. This is good. And then he said, you need fiber. And I was like, fiber? I need to change my diet. I need to eat fiber. So that's how naive I was about the markets. And then I realized cable is British pound, fiber is euro. I didn't know what Forex stood for until later on I realized it was foreign exchange. People were begging him to actually keep going. So I ended up sticking with it, and luckily he promised everybody, look, I'm going to build this for my kids. I'm starting off with the basics and I'm going to work my way through. So I thought, perfect. Please stick with the basics, because I have no idea what you're talking about. So I had to study and then because I was working shift work, I had access to the markets like crazy. So I was either going nonstop as a medic. I'd have a lot of downtime in the oil patch. You know, our shifts were 12-hour shifts. So you get up at 5 in the morning, get to work for 6. You're off by 6 at night. And you do the same thing again the next day. So I'd have access to day. I'd sit in the clinic and wait for patients to come in. I'd have my computer open, patient come in, work my patients, and then when they're gone, open up my computer. I had access to the markets. I had hours and hours and hours. So I put in thousands of hours. Traded live, did all the things that Michael said not to do. I did them. Made a whole bunch of mistakes. Tons and tons of mistakes. Back then, the markets were doing a real crazy shit back in 2017, and Michael hadn't even done I think he'd done maybe 3 trades by January. I'd done over 3,000 trades. 3,000 trades. I kid you not. I was so excited about this stuff. I was like, oh, it's reversing. And I would literally catch it. As soon as it did this, I'm like, oh, it's going down now. And I'd short it. And then it would go back up again. It's changed its mind. It's going back up. I literally chased price. Here we go. Now we're popping into that. So do we get support here? Anywhere inside there, look for that support. So anyway, yeah, I started, and Michael, the poor guy would go through so much, because we were doing it live back then. Michael, like I'm doing with you now, you get to have a chat with me live here now. With Michael, we're doing the same thing. And he'd get up, we'd be up in the mornings trading the market. He said, like, okay, I'll be up at this time. I'll be doing live. You guys just sign in. And, you know, none of us could actually speak to him. We had to type in. And there was one guy that would monopolize his time so much. He got to the point, he was like, okay, I got to stop doing this. You guys keep throwing me off, because on the side here, he kept getting all the words, people streaming questions at him. And he's like, I'll get to it. Just trust the material. It'll all be there. All your answers will be made. And he got really frustrated. So he had to go through a lot of growing pains with doing it live, because we were with him every day, live every day. And sometimes 2 times a day. We'd get him in the morning and then again in the evening. And he'd be trading it live, and he'd do all this stuff that was just, I loved it. He'd go down, he'd put something down, he'd go, oh, the price will trade down into this box and then it will leave. And then we're literally watching over time. It comes down, hits the box perfectly and leaves. And we're like, how does he do that? He influences the market. He's amazing. He's a genius. And we just loved it, right? So he had a great way of keeping us interested. And we ate it up. We ate it up big time. So he ended up losing some students. Yes, back when he first started out, he thinks he's a great teacher, and bless him, he's got better over time. But back in his 2016, he was kind of rough, and his videos are hard to follow at times. But if you stick with it, repetition is the mother of skill. Eventually, you'll figure it out. If I can figure it out, believe me, anybody can figure it out. And it's taken me 7 years. I've been doing this now. So 2016, yeah, this will be 7 years. This just passed. So 7 years. Loving this stuff. I still love it. I'm a lot more confident with my stuff, but I'm still very reluctant to enter in big trades. And that's the psychological stuff, the damage that you can do to yourself if you trade live money before your time. You will spend potentially years trying to overcome that, if you ever do. So when he tells you don't trade live, till you know you're absolutely ready. Not you believe you're ready. Really take your time. Cause because he goes off topics and then loops back around. Yeah, that's because he's ADHD very much. You'll see me, unfortunately. Sorry about it. He said it. I've got the same kind of problem. I have a tendency to just talk, and then come back and loop back onto what it was I was discussing later, because I've got so much I want to share, so much I want to help out with people. I will just randomly, I'll just say, Darren, get back on topic here. Come on, man. Have you tried prop firms? Yeah, I'm actually in one right now. I'm in Fivers, and I'm slowly but surely creeping that one up and getting into funded account. So, and I've got the $50 one. So for you, if you're down in New Jersey, then you could probably get, it's $39 or something like that for the $5,000 account, but you can't lose more than 5% in a day, and you can't lose more than 10% overall. So you got to be super careful and just do it very, very slow and meticulously. Once you've proven yourself at the first level is $500, and then after that, so you just got to get it up 10%, and then from there you get level 2. Once you pass level 2, then you're funded, and it's just slow and steady wins the race, man. I haven't tried any other prop firms. I've had friends of mine that have tried prop firms, and there was one, I don't know the name of one, but you had to pay a monthly fee, and he was not happy. I'm in phase 2 of 100K with Bespoke. Oh, okay, good for you, man. Good for you. So now is that a monthly fee you have to pay to keep that 100K, or is it like a one-time deal? You get to pay it once, and all the time you follow the rules and you don't violate the rules, you can stay in it, and you don't have to pay to be in it every month? Is that how that one works? So we're getting a reaction off of this. No, was a one-time fee. Oh, good. I have to look into that one. Bespoke, hey? And there's still a 10% deal. Yeah, and if you make it past phase 2, you get a refund. Yeah, Fiverr says the same kind of thing. If you get past a certain level, they give you your money back for what you paid for the, well, I think it's like $10 or something like that. So if it costs you $30, it's down to $20, and then you make more money back as you go. But they have theirs to go up to 100% funded, plus they pay you cash. If you get, let's say you got to a $500,000 account, excuse me, then I think they give you, excuse me, hang on a second, I'm having a coughing fit. Okay. Yeah. When you get past 500 grand, I think they have like you get 100% funded, plus they have a contract where they pay you up to $10,000 a month to trade, and you get 100% of your profits. I don't know how that works. I'll worry about that when I get there, because now they've really got you hooked. So not only do you make all your money, so people say, well, why don't you just trade your own? Well, how many people get their own account 100% and then get $10,000 on top of that to trade per month? So they contract, so they obviously mirror your account, make the money off themselves, as long as you stay within their parameters and their contract. 8% phase 1 and 5% phase 2. Excellent. Slow and steady, man. You're just starting out, so take your time. Keep your brain fresh. Don't rush your trades. all that kind of stuff. Like, you're looking at a veteran who's been beat up in the market in a tumble dryer, like I tell you, and trying to get past that psychological barrier is huge. Who said GBP USD? We have a fair value gap at 10 o'clock. GBP. Holy, look at that. Big drive down. Where is it headed, though? Below here? What's that? %. 79% retracement. Just pop below it. Yeah, I wouldn't touch this one right now. Just because I'm not sure what's going on with this. We had a swing point here, breaking structure. We've got below this fair value gap now. Do we come back up inside it to continue down on the lower side? Do we drop all the way back up into this fair value gap here before we run back down? So I'm not quite sure how. Yeah, there's nothing in here for me to key off of except for here. Now that we get a body, if this body closes off now in the next 45 minutes, comes back up, finds support at this and pushes through, that becomes the inversion fair value gap right there. So keep your eye on that one. I'm going to go back to my 500 here. 1 minute. That's the 7. Oh shit, that's the silver bullet right there. Too much talking, Darren. Silver bullet. There's the 17:05, so that's the 10 o'clock one right here. 10 o'clock is right there, the top. We ran up to the breaker, hit the breaker nicely right off the threshold, came down, look for the first fair value gap that forms. Bingo, right there. Forms right there. Enter in 1, 2, or 2 would be here, and then 3 is up there. You don't get the 3, but you would have got the 1 and the 2. You're aiming for 1, break even, and now you're looking for here. There you go. There's your next one. And you're looking for down here. Pay your trader. Pay, pay, pay. You could take like 10% off each one of these. It's fine. But that's the silver bullet right there. And if you would have taken that right, even if you would have said, I'm going to take it right there. That's 4 handles right there. Or is that 6 handles? 228. 4 handles. That's why I don't like news days and usually skip them. So you're looking for down here. This is the next price leg. It shouldn't come above here. If it comes above here, then I'm more bullish than bearish. So I'm looking for continuation on this little price leg down below this low here. So we are going to go light on this one. Oops. Not quite where I wanted it, but I'm going to put it just above that. And there's that. If it runs up to there, you see how that spread can still take me out? I like to call this a ghost spread too, because not only do you see this here, there is another little one above that actually will take you out. The dealer opens you up and they always take a run on your account, man. Those bastards are always notorious for that. So these two lines, your bid and ask, are not the actual prices they will take you out. There's a little ghost line above and below that they actually take you out at. So when they're getting close, if you're here and that yellow line was there, they would take you out there. So here we've just got the same kind of thing. We have a breakdown below structure with a body fair value gap formed. Ideally, I wanted to get in right there. I would never have got that perfectly because, again, the bid-ask price, you would have been down pretty much where I got in right there. Yeah, I know. Do we feed the wolf? Do we feed the wolf as soon as we go below? Oh, feed the wolf! Feed the wolf! Oh. Oh, how come it's not working? Do I even have him on? Oops. Oh, is he even on there? Feed the wolf. Oh, I don't have my time zone. To feeds the wolf. Feeds the wolf. Oh, okay, there we go. We're taking some cash now. Now I'm going to move this guy here. I'm going to be just above here. I took some money out. I'm in at 43.25. Oh, you got down here. Okay. Did you take a piece out here right away? Feeds a wolf. Yeah. Took some more. So this is taking, I can set whatever I want for when I want to feed the wolf. I get to take out as much as I like. So I can adjust these to whatever level I want. So I take out another 10%. So I'm already down 40% off of my trade. And we're still $100 in, aiming for it right here. And as soon as I break this low, I'm going for break even. There's zero stress trade from that point on. I'll take another 10% off there and another 10% off there, and it'll be zero stress. So that trade will cease to be a risk for me. So I want to see this hold price now. Watch this guy here. Get some legs, push through. No, I only closed slight profit. No, only closed. Oh, you closed out? Yeah, I'm out of mine too. If I get back up into this guy again, if I get back up in here, I might go short one more time, but this time I'm going to start cutting my leverage in half. Like Michael says, if you start getting lucky, I shouldn't say lucky, we're not lucky, we're looking for precision entries. cut your risk in half. So now we've got a gap that's formed right here. See that little price imbalance? We've just gapped up. So is this just this inside this consolidation? We've come all the way down to here. I like there's a little piece left up here. Equal highs. Look at this range and start to say, you can afford to get picky. You know, don't always just jump on every little hole that you see. That doesn't sound good. Within reason. This little hole you see right here, we jumped on that to get low here, and we're aiming for down here. And if it makes it, great. Then we still got, I got a portion off. We pay the trader, man. That's where you do another feed the wolf. And you'd be tagging out another one there. So you're down to 20%. Take 10% off there. And leave the other 10% to run. You move to break even. And maybe we'll run him back into this thing here. But that first price leg I was telling you about, from here to here, take that price leg from there to there down, and you'll see where the objective is. Haven't traded the SPX before, so wasn't sure how it moves. I agreed with what you were saying, but was still nervous because never traded it before, so jump out quick. Good for you. At least you're, you know, be careful about how if you jackrabbit in and jackrabbit out, you might give yourself a false sense of, especially if you make money, you might give yourself a false sense of, hey, I'm doing this right. And you'll start developing a jackrabbit kind of mentalities, hopping in and hopping out really quick. There, that's just hit the objective. Boom, perfect. So now that price leg is completed. So I called the price leg early just because I wanted you to see what that price leg looks like, and obviously areas of liquidity that we're running for. So perfect, turned out exactly where we wanted it to. Nasdaq's looking like it's about to create a FPG. But still 2 minutes till 5 minute candle closes. See, I'm trading this with my demo. I'm not touching it with my live account. That's okay. We're paper trading today. We're still hitting our objectives. There's a little pocket down here now. You see how I got out there? That's all that fear-based stuff. Even though I called for it down here, I got my entry, perfect entry here. Saw the price leg, a logical levels for it to reach for. And yet when it started coming back, and all I could look at was, oh, I'm going to lose some money, I got out. So that's the wrong kind of thinking. If you're sure about your entry, take your entry. Set your stop loss. And if you take your loss, you take your loss. Reevaluate where you went, where your read was off, and then reset for the next time. Cut your leverage in half and start. And if you get 2 trades that don't pan out, then get out of your trades. Like, stop trading for the rest of the day. Because if you keep trying to stay in the market to recoup what you lost, and believe me, I've done that. I've done the revenge trading. I've done all that shit that you're not supposed to do. So look at this objective right here. I stick to only 4 pairs. Yep. You're starting out, man. The best thing you should do is stick to 1 pair. If you're in euro, stay in euro. If you're in GBP, stay there. If you jump around, especially if you've only been in a month, really focus on looking at analyzing this market, how it does its thing, and say, I'm staying in euro. You can use GBP to see which one's stronger. You can also use the euro GBP and find out which one is the sixth sister. Which one is the strong? Do you understand what sixth sister is? Did you ever listen to Michael's stuff when he talked about the sixth sister? When you're looking for which one of these guys to trade, go to the Euro GBP and see how they are working in tandem to one another. Which one is the strongest one in the pair? So which one is pulling up against the other? So if it's a Euro GBP, Euro is first in the market. So if it's going down, that means Euro is losing against the British pound. So that's the sixth sister of the two. And then also compare it to other ones like Euro Swissy, Euro, something else, and if it's not holding its own against those other currencies and GBP is pulling out away from those currencies, then Euro is the sixth sister. Do you remember how he talked about that stuff? I haven't got no, I haven't got to that, but I know they trade pretty close. Yeah, they do. And usually the euro follows the pound. But when they broke apart during Brexit, it started getting really kind of sloppy and messy. Michael wouldn't touch that. British pound used to be his main focus. He used to love that one. And it kind of, once we got into Brexit, it just went kind of nuts. They did a lot of manipulation in the British pound. And I'm originally from England. I was born in England. You wouldn't tell, but I could pull it out for you if you like. It's not a problem. Anyway, the accent is tucked away for special occasions. Anyway, this British pound, I was very loyal to British pound, and I lost a ton of money because of the manipulation that was going on inside it. So I went to euro. Euro is a lot more smoother and consistent. So I went to that, studied that one out, and that was my main go-to Forex pair. I even tried trading the Dixie, but the spread was I didn't have a clue what those big lines were. I was like, I've made money. But meanwhile, the bottom, the spread line was so massive. I'm like, why am I not making any money? Well, the spread was 20 pips or something like that. It was some retarded level. So, yeah. Find your pair, stick with it, look for the sixth sister type of setup, and if you need a hand with that, let me know, and I can kind of go over that with you. I can help you out with it. Meanwhile, let's get back to this guy. So keep your eye on your euro inside that inversion gap. Right now, we're just sitting there waffling around, so we're looking for a breakout, up or down. Make up your mind. Where do you want to go? Where's our gap? How do we get in on it? So whatever your setup is, wait for it to happen. We're looking at a point now in time where we might see in the next few minutes, we might see a pop down and a nice big punch out. So keep your eye on that one if you're looking at euro. And we've got all our objective met. Look at that, even down to that little guy there. All those objectives were hit, and yet we got out early. Gotta trust your analysis, man. Trust your analysis. Change of character in NASDAQ 100. That was the price leg I was looking for in NASDAQ, coming all the way up there. We're just back into this gap here, the BISI. Keep calling them gap. It's like I'm cutting the words off. Fair value gap, not a gap. It's a BISI, buy side imbalance, sell side inefficiency. So we've come back inside it. That's where you get long, middle, and stop loss goes down here. Only got one today. That's good. I'm all right. We always walk out with nibbling some money out of the market. We tripped over a couple of bucks, picked it up. Look at that, came right back to the order block, tagged it nicely. Now, is it going to leave? What is the 1 minute looking like? So if we've tagged it and we're leaving, we're looking for a break here. I want to see this get, ooh, gap above. Break in structure. Now I want to see it come back into here. Let's look for a line in here. Yeah, it's punching. Okay. So we hit at a logical level. We have a break. Price imbalance, breakaway gap forming. SIBI breaking above it. I like it. We come back into it, right into the top of this here. And I want to see this stay open right here and get into here or here. Your stop loss has to go down here though. Body breaks above. Entry 1, 2, 3. And if you really want to be bold, put your stop loss right there. If you're pretty confident in your inversion gaps, which is what this one is right here now, because we've gone through it. Our body's gone through it. Come back, and we're tagging it. Now do we keep driving up? And me, I want a bit more. I want a better price. So I want to see it come back into here. If it comes back to that, I'll take a long. But that is technically your entry right there. And it's gapping up. And it's okay to see it and call it and say, yeah, we called it. And right there, just up to here is 11 handles. And you're just looking at this guy right here inside that inversion gap now. We finding support, come back down. Then we want to see it drive through that guy. See, clear this high and start running up into here. This liquidity above. Those are my scale out points. Ding, ding, ding. Here and then finally up there. And we're not going with that. We're going to go with 0.5 just because we want to play. There's one. Okay, 14,843.1 is looking half fair value gap for me. Yeah. 14,408. 43, 843, yep. There we go. Did you get in? You got right on the halfway point, which was right there, right on the very tip of that guy's the halfway. So if we're running back into here, delete, fill, we'll do one there. So you got to think our stop losses have to be way down here. We're digging into that. I want to see this stay open. If it does drive all the way back down to here, yeah, I would like to see that stay open. And at 18,474. 1847, so you're up here. Okay. That's where my stop losses unfortunately have to go really deep. I don't want to see this thing fill. If I break that high, I'm going to bring my stop loss up to here. And I'm going to start scaling stuff out there. I'm going to feed the, where's get the wolf in here? What? Just took my trade out? Huh? What the hell happened there? I took one of my trades out. I'll put them back in there. Okay, there we go. Now this is where you go, did I make the right choice? Did I make the wrong choice? Well, if you're breaking even now, just go click, click, close yourself out. But I don't want to see this one lose the threshold here now. Stop loss is 14,824. 824, yeah. I'm just below that. But I want to see that stay open now. That's the breakaway gap. I don't want to see it come back down into here too much. So this becomes a new price lag. Look here for price lag. Into this order block here. Somewhere around there anyway. So I like to see it get up in here, like we'd mentioned earlier. I'll give that a few candles to make up its mind what it wants to do. This may be one of those ones where you go, we'll look at this on Monday and go, remember when we were talking about that one on Friday? It reached for that lunch hour thing. That might be it up there. Yeah, I like to see this get out of here. I don't like this, all this waffling stuff. Start moving. This is the thing with the NASDAQ. You can get quite a lot of chop going on. You've only got one trade on right now? Wolf's got to eat. Yeah, you just got one trade on right now? Is that what you've got going? So we're just saying inside this Sibby right now, or Bissy. 1, 2, 2 in a row. Second one's the one you really aim for. Yeah, just one. Okay. And you're at 47. 48, 47. This is that range thing. Like I gotta develop in my eye cleaner on this one. Sometimes you kind of rush in just because you see these inversion gaps and stuff. There's 62% of that range. We're in above 50. We're in a premium. We bought it for a premium price instead of a discount price. You know what I'm saying? So I gotta keep this in mind and say, I want to settle for a price that is below in the discount range if I'm going to go long here. And if it doesn't come to me, then forget it. I won't take it. That's how we got to kind of keep looking at these ranges and don't get hooked on this whole what do they call that, the bull candle or bull flag or whatever it was they called it. Okay, so 10% out. Follow the wolf. There we go. Break above that high. Now we're looking for. Nice. I like that. Go, go, go. Now you get to run. And we shall take this, and I'll move this to break even. I'll move this to here. As soon as it gets above there, we shall feed the wolf for my again. What's my bot going to do? 14,860. Oh, it's going to take it right above there anyway. Good. Now they're all break even. I let my bot manage it from here. My bot moved everybody to break even. And actually, I'm going to take this dude and I'm going to move him to break even as well. Now they're all in profit. There you go, my friend. You made some money today. Euro GBP is jumping. Euro GBP fair value gap is formed. Keep your focus here, right now. This is where you're about to make some money. Pay yourself more up there. Feed the wolf. Burp. Coming back into mitigation. We going higher. Yeah, we are, my friend. We're aiming for here. So move your stop loss to break even. Well, do whatever you like, but you can take your stress off your trade now and just watch as it unfolds. And you've nibbled off. If you're nibbling off, like, manage your thing, because if it trades back against us, we took out a chunk of money out of that, right? I like just taking some cash out of here. There's another. So here's where the little bit of it can run to that imbalance there, and that'll probably take me out. So I'm going to close my trades. I'll probably regret that, but that's where the run down to is. It's okay if you're still in. I might put another little half on right here. Actually, I'm going to cut this in half one more time. We're getting on in a day, so 14,851, 14,851, 14,851. Yep. So you're right in that. You put your stop loss right in that imbalance. That's where I thought it could come back down to, and so I closed out my trades, and I'd enter in one more time there. I just nibbled as much if I could as profit, but here's a good example of it. Just filled the fair value gap here. If it keeps pushing up, you're still golden, but watch the spread. Even if you're sitting right here, the spread, they'll still take you out. So either notch it down or put it at the bottom of this thing here. If it comes down again, at least you'll take a little piece of profit. Way to get above that candle. We are there. That's above it. Good. If you lose the threshold of that candle now, this is a basic order block thing. If you lose the threshold before it comes to your stop loss, then that's a potential out. You could get out. Portion off here. Got equal highs now. Okay, this way I take a little profit and call it a day, since I said I wasn't going to trade because of news, but good look. But look good enough and able to take a little nibble of profit. My brother, that's what I like to hear. Good for you. Look, and you took it out and you watched how the market just came back against you. That's why you paid the damn trader, right? You pays the trader. That's why we nibbled off. That's why you got to love the wolf. You got to feed the wolf when you can. Feed him above these little highs. Take some profit out of there. So this just came back inside that fair value gap, and now I let it slam on up. Let it really drive on up hard. And we're out of the market. We've done our damage today. We've taken some good profits. A little nibbling on a Friday. You got to be careful on Fridays. If you're new to the market, Fridays can be quite a beat up day. So if we're looking for our basic setup, which is what we look for today, we got in here, and we got in, we got in down here, didn't we? We looked at this return here. We evaluated a better entry, which was the 62% retracement of this little range that we're looking at. When you got two fair value gaps and a price imbalance down here, we want to probably be real careful about how you're making your entry. So who said it? And myself this morning, a couple of other people just turned up. Welcome, you guys. And feel free to throw in any comments you like in the chats, and we can discuss the stuff if you like. If there's any specific entries you guys are looking for. We've made our little bit of money today, so we're kind of just sitting here on the sidelines, puffing up like little peacocks because we made a little bit of cash. Even if it's $5, I don't care. So anyway, there's your range, and we got fair value gaps inside there. Always look for a more of a discount entry. We kind of got up on top of this guy here, where the more appropriate place for this one would have been the optimum trade entry level, which is 62%, which finally came down there, hit that, and left with some sense of urgency. And then you start collecting, pay your trader up there. So now we're down to this level here. If we lose the threshold of that candle, then potential to run down and back into that little price imbalance there. So kind of keep an eye on that. We nibbled out right at the right time, my friend. Did you see that? We got 2 profit trades today. Yeah, man. Party, party. Look, I'm going to send you little party things here in the thing. See that? Woohoo! Party. Love it, love it, love it. Yeah, see how we got a reaction off of that now? Came back, filled the fair value gap in, off the order block, right off the threshold. Beautiful. Now, we want to see these things provide support. These inversion fair value gaps now, because they are now inversion gaps. Because we've come down and we filled the BISI, and now we're pushing up to our objective. Woo! This is exactly what we called. Nice. Look at that. 2 minutes straight up. And how much money did you just make? 30 handles. Hello! 30 handles. Look at it run now. Yeah. And that's the price leg I was talking about. So we're looking for a run into here. That's the objective for me for the day here. And if it gets that, then we're looking at this other one, right? We're looking for this other piece right here. That was good. We made some good trades today. Didn't lose anything. Look at it run. Bro! Too bad didn't give my stop more room to run. Nah. Don't get negative on yourself, man. You'll beat yourself up. That's not the way you want to think. We just nailed awesome trades. We didn't lose a damn thing. We got into some zero stress trading there, right? We did a real good job of that. We picked it. That's all that matters. We don't get all out of there. I'm all right with that. The coulda, shoulda, woulda, that's just the mindset where you start to doubt yourself, or you put doubt in any decision that you make. You beat yourself up for making a decision in the past. No way, man. You made some good money today. Even if it's $5, it's good for me. You made a logical trade out off of a logical level. Don't beat yourself up over dragging stop losses and stuff like that. You had an awesome, because now you'd be like, oh, good thing I did. Look at this. Now you're saying, oh shit, I'm glad I took it out. I didn't move my stop loss, because all you would have got was the extra little piece there, right? You would have took out another 10% off of there, and then would you have moved your stop loss up and come back down and taken you out anyway? Who knows? But that's the big swing. Don't beat yourself up over that, man. We did a good run today. Always Monday to do better. Yep. Yep, profit is profit. Soon as trade closes, move to the next one. Yeah, Just don't beat yourself up over an old trade, especially if this rocketed. If this just shuts through the roof right now, you go, whoa, I don't know what the hell happened there. But our objective, which is what we're looking for here, now your whole stop losses have been taken out, cleaned out. So I would never hit my objective because my stop loss, I would have pulled my stop loss up tighter unless we let it sit down here still. So let's just pretend for a moment that we decided, some people, and this is what drives Michael nuts about people who say, you know, you're a pussy if you start paying yourself too soon. Like, that's ridiculous. Who would not pay themselves an opportunity to make money? My buddy Richard has he's a firm believer in this as well, man. If there's a dollar bill on the ground, you'd stop and pick it up. If you have an opportunity to make some money, stop and pick it up right there and there. So we're aiming for fractal highs to start unloading our position. So we're pretending that we're keeping this here. If you keep you're not one of those people that moves to stop loss like I do, because I'm in it for a snipe. I'm not in it for a long haul. I'm in to take my money and then get stress-free as soon as I can. Because I like stress-free, because, you know, that's the kind of thing a paramedic firefighter loves. We love stress-free. Our whole life is built around that crap. So if I can reduce my stress in a trading environment, that's my objective. That's why I built this thing in the first place, to cut back on all the stressful moments. So we're going to pretend we're keeping our stop loss here, and we're going to aim for still our objective here. So if we never moved our stop loss and we never paid ourselves, let's see where this would have gone had we not even paid if we were waiting for our objective only. You're making some profit. Now you're in a squeeze because our trades were right here. So just so those of you who have just popped in, I want you to kind of get an idea of where our trade was when we started. We put one in there and we put one in here. So we're at the top of this and at the bottom of this. Oh, you can actually see if I put my trades on here, so we're not hiding anything from you. There's the trades. Dook, dook, dook. We started paying the trade. They started using the wolf. Pay the wolf, feed the wolf. Like, that's what we're doing all in here. And now we are in the hole. So we made money, and now we would be losing money if we hadn't paid the trader. So we'll kind of see how this kind of pans out. How is your euro? So your euro broke out finally. That was the place that we were looking for support. We sat on it forever, so you'd be sitting on that for quite some time. And if you're a new trader, that might be stress that you're not willing to, you want to see it leave with some sense of urgency. And this banging around on here could give you a lot of doubt and a lot of self-reflection before you realize, oh yeah, it finally did take off. So you wait for the breakout. So we have a breakout above the consolidation. We return to consolidation perfectly. Like, I don't know how many times you need to see this as a setup. This in itself is a setup. Look for consolidation. Wait for a breakout above consolidation. And as soon as it returns to the top of the consolidation, you can get in there, or 50% of the consolidation for a continuation on the upside. And your stop loss is close. In this case, it's pretty close. And you're aiming for your first objective right here. So even there to there is 16 pips on a euro. 16 pips. At 122.08 British pound. Look at that. Came all the way down to 8 all the way through there. And did you say you're in? I'm in GBP at 22.08. 22.08. 22.08. So you're right here, right? You're getting in now off of this guy here. All right. You've run the low. Okay. You're hoping this is going to be the low, I assume. So if the body closes below this, be careful. If you have a body that closes below that, then that becomes the new inversion gap to continue on the downside. Now, I don't want to throw doubt into your thing. If you got your trade, put your trade on. I'm not trying to tell you how to make your trade. I'm just saying, kind of be careful when you're looking at these inversion or these gaps, these BISIs and SIBIs, and where and when they will not provide support. So just keep an eye on that. If you do, I don't know what's your upside objective? What are you aiming for? Yeah, long on it. Okay, so tell me where you're going. What's your objective? What do you want to do for what's your upside objective? And where's your stop loss? Is your stop loss down here below this low? 25% of that wick. Targeting the 122.52, 122.52, 122.52. What target? This order block? 122, 122. 52 right in here. So you're aiming for this inversion gap here. Yeah, probably take some, if it does come back into here, you know, take some portions off inside this fair value gap. You may not get that. You may just get a return to, because don't forget, this is a swing, so that becomes a breaker. If this breaker has sensitivity, it'll be here and here and the midpoint of those two candles. So watch carefully on your return. Pretty bold entry for this. I'm not super confident that you're going to get what you want. It feels more heavier for me, but again, that's me. Don't let me influence that. I just want to bring your attention to this point right here, this little inversion gap we just got right here. Let me turn that into a different color so you get an idea what I'm looking at here. And don't change your mind just because I decide I'm telling you something different here. You could have I don't want something to contradict that. I don't want this to if you've got your strategy, do your strategy, trade your strategy, whatever your setup is. But you get a body, traded below it. We're up, we came back up inside it. Now, are we going to continue pushing down? Which is the kind of feel I'm getting for it. If your stop loss is sitting down in 121.86, 121.86, so you're down in here. Okay, so you're just below this guy here. So look at 25% of this, no more than 50%. If you get a wick and then it turns around and runs back up, good call. Good call. I'm an inversion fair value gap guy now. I love the inversion fair value. I just seek them out. I look for them all over the place and say, where is that providing support? Where have I seen that provide support before? And what is it aiming for? What objectives can I reach for? And I can nibble something out of the market. All right. So there's your 25% of your range. Let me make this a little bigger now. So if we're zooming in on this. So there's 75. So that's 25% right there. 50% is right here. So we want that to hold your price now, because this shows weakness. If we can't push down through the 50%, we stay in 25. That shows weakness, and we want to see a return back up into this higher range here. So you're looking at 22.50, 22.35, a fill of that gap. I want to see it get above it, find support at it, step up on it, and then keep climbing up and giving you what you need. But watch this area here. Okay, aiming for that 905 candle before jumping up, before slamming down. The 905 candle. Also, you're on a 5-minute time frame? Oh yeah, okay. This, you want this thing to, if you're on a 5-minute time frame, let me zoom out there a little bit. Okay. Yeah. I can see you. Now we're digging into this, but I like this here too. This is the inversion 5-minute fair value gap right there. It could come down to 121.93. And then start pushing up. So on the hourly, I didn't like that on the hourly. On the 5-minute, if you're looking for a run of right above here to start scaling out, there's no break in market structure on these sides though. This could be another new price leg down. So be careful. This, because there's no break in structure, we have no break in market structure yet. The potential for this to keep running down is greater the more we lose more of this fair value gap. So hourly, we're already below that hourly gap. The BISI, we've eaten through it with a real sense of urgency. Kind of give me an idea that's pointing, it's giving you an idea of where it wants to go. It could come back up into here. It's finding support. It opened up here, came back in to the inversion fair value gap, finding support and pushing down. 5-minute. So you're lining your sand here. You want to see that midpoint, hold price. This inversion gap, this SIBI inversion gap here, you want to see this. If it supports, and again, I don't know what your setup is, pick a setup that works for you all the time and run with it. If that's your inversion gap, you want to see it find support on that and go back up. If it starts to eat through that, I wouldn't have a lot of faith in quick return. 50% of this range is up here. Do you want to see this start really pushing back up to get up here? This dip, just clean these guys out here into the range. Push, push, push. It's like childbirthing. Push, push. Get on top of this here now. 911. It is 911. I don't know why my eye tunes into that on a clock when it's 911. I always seem to look at a clock. I don't know if my unconscious picks up on it, but every time I look at a clock, I'm always looking at 911. 9/11. That's 32 years in a career of 911. So your first objective, scale out some of your money up there, buddy. that's my advice for what it's worth. And, you know, if you got your strategy, do your strategy. But we're coming back up into that, hitting that 11:11 here. 11:11 for you. It's 9:11 for me. I'm an hour south of New Jersey. Oh, it was New York? There's a heart in the way. South of New York. In New Jersey. In Jersey. Not New Jersey, Jersey. Also, you're like right there, and you get to trade the New York on the time. So you're coming up for lunch hour. Yeah. This would be a nice little price leg if this all holds and your theory holds well. I would say the next potential price leg for you is right there. And look at that, right to the pipsticles, right there. Right to the pipsticles. That old low inside the breaker. 22.35. What did you say your objective was? Take profit at 22.52. Oh, okay, you're way up there. 22.52. Ah, okay, you're aiming for this guy up here. I like. So pull your fib tool, top to bottom, 50%, 62%. Make sure you scale out some there. Piece here, piece here. And let some ride for your higher objective. Oh, I hope I'm wrong. I hope you keep running, buddy. Watch that area there. Oh. Who else we got in here? Somebody else is in here, but they're not commenting. Whoever you are, welcome, and you're welcome to type in anything you like on the side, as long as you keep it germane with trading. And any advice, any input. If you're new to trading, welcome. If you're an old seasoned veteran, welcome again. We're all about helping each other out here. And my boy down in New York or down in Jersey taking a trade. And we're hoping we get on top of this hourly inversion. We're coming up, just tagging into it now, so I'm going to kind of remove all that stuff out of the way. This was the call we made for higher prices based on a couple of days ago. This was the daily objective I was calling for a few days ago, for those that are new here, and we're looking for a run up into the higher time frame. What we want this to do now is just hold up here and come back down, and we'll get a tap in here or a tap at the very bottom of this. This would be the fair value gap we finish off on the daily for the weekend. Then Monday, Tuesday, we have a return back into this area here. Hopefully not a fill, but just a tap into it. And then run for higher prices. That was my call for the rest of the week. So let's get back down into this guy here. Oh, we're at 5 minute. He's on the 5 minute. Okay, so we're still getting a reaction off of this. Look at this order block here. Look at the mean threshold of that order block, which is somewhere around here, 2209. On a 5 minute, you don't want to see it close above that. Because we have an order block here. Now we're above it, coming back into it. We've tagged the top. You want to see this threshold, get blown out, and continue down. Oh, no, you don't. You don't want to see that. You want this to continue up. You're on the upside. 2 profitable trades today. Join us. Yes. Whoever's new here, we had some good profitable trades today. We're calling it like a banshee on it. So here we've got this order block, come back down, tagged it, now pulling away. This is what I want to see a run now. Start pushing up. Leave this open. That becomes our breakaway gap on the 5-minute. We've got resistance on the 1 hour. That's a 1 hour inversion fair value gap we're banging off of there. So you don't want to see this threshold get blown through, because if we start to eat further into this thing, you start to lose the probability of running higher. At least I do anyway. Not that it couldn't just suddenly reverse and go all the way back up there. Long here, no blowout to the bottom. Long here, no blowout to the bottom. That's right. I'm like, sorry. I was on the wrong side of that, buddy. Sorry. I want yours to happen, but I'm like I was saying earlier, it feels more heavy to me. Now that we're through this order block and we've come back into it, found support, now we're starting to decay. That inversion fair value gap looks like it's supporting price on the downside. And we've got lots of big object. Oh. Reconnected successfully. Oh, is out. It popped me out there. Reconnection successful. All right. So if you're still on, I don't know if we're still on. I hope we're still live. Long here below. Can you still hear me? I don't know if I'm still connected or not. Yeah, okay, we're still on. I thought we lost it, except my connection was lost. So we're looking for, you want this to run back up. Feels kind of heavy to me because this, we're through the body, come back into it. And now we're hitting that wick. We're through the 25%. If we get to 50%, if we start breaking the 50%, then I think we're going to continue on the downside. So, and this whole range right here, we've only wicked down below the 50%. We got a pool of liquidity down here. We have an old fair value gap down here. Okay, here and see fine. Good, thanks. I really want this to hold price for you and start to reverse. But you're on the 5 minutes, so I have to keep thinking you're on a different time frame than I'm on. So this looks like nice. We're through it. Come back down. You want to see this price climbing out of here. And where's you say your stop loss was? Your stop loss is 128.860. 121.86. 860, 121.8, 121.860. So you're right down in here. Okay. I'm going to go back into, while we're waiting for that paint to dry, let's go over to euros, sideways, daily gas. Ooh, we came back a little bit. Nice. Australian dollar. See that pull back? We saw that this morning as a big bold candle running right up there. Thinking, woo, she's taking off, right? Nothing. Just came up. Ran into some liquidity. And we've got a huge pullback right now. We got a 50 pip pullback. 45 pip pullback so far. What were they aiming for? Ah, right there. Look at that there. Let me close this out here. See that? Breaker. Right off the breaker. Fill. Fair value gap. Your SIBI. Sell side imbalance. Buy side inefficiency. Breaker. Last up candle before a run below an old low. That's our breaker. We came right up into it. Hit it. Filled the fair value gap. And now we rejected off of it. Now we've eaten through this gap, so that becomes an inversion fair value gap for price now. We might actually do some trading in here. This looks like it's a nice... So if we get our trade back up into here, we've broken market structure. Well, it's not really a swing there, is there? But we've got into this fair value gap here now. This BISI. Another BISI here. So I would like to see this come back up. This to provide support and then continue on the downside, aiming for whatever low is created here, and then start filling in portion, start taking some money out there, running for here and here, and working your way down. Keep in mind this is a mitigation block here overall. It's the breaker for the parent breaker for this huge run down. But it's a mitigation block in that it doesn't break below an old low. This guy here, this guy here. So we're eating through mitigation already. So mitigation blocks are not as strong as breakers. But it is a breaker for parent overrun. Inside inversion. Bottom of that inversion gap right there. See how it's tagged it perfectly over here? That's SIBI. We've come down. We've gone up into it. Finished it off. Come back down. Went all the way through it. Come back down. Now it becomes an inversion gap. And now we're pushing back up. So now we're between this inversion and that inversion. In a premium portion of a huge range here on the daily last couple of days. Right. Long here, no blowout. Yep, here and see fine. Yeah, right after the block. We're in profit. I really only been following the silver bullet model, which is your main go-to model. I like the silver bullet one. Let's go back to this one. You're in profit right now. Your entry, I'm in at 22.08. Oh, you're right back to break even at least. Okay. Good, you're at least break even. I like it. So we're building up some liquidity on both sides of this now when you go sideways. Then you're in a consolidation and you're waiting for a breakout. Your stop loss is not bad. Keep coming. It's like a Maverick, Top Gun. Keep coming. Keep coming. Hey, this kid's good. This feels like sex in your 50s. It's like, oh, keep coming, oh, you're losing it. Oh, you're losing it. Oh, nothing whatsoever happened down here in the old oil. Ooh, look at that, right back to the weekly imbalance, right on top of the fair value gap on the daily. Wow. Okay, so we've lost. So I was looking for $95. I think it was my call for the oil long term, 95 something. What's that there? 95. Oh, I don't want to move it because I don't want people to say that I was bullshitting here. Let me move this over a little bit. Maybe we'll see the number. There you go, 95.10. And we got to 93.10. Not quite up there yet. Oh, there's the highs up there. Yeah, 94, big figure. So I was $1 short. $1 short and 2 days late. So we get a big retracement here now. Okay. I'm going to look for this stuff down in this fair value gap down here now. I'm going to pull that out of here. We're looking for 62%. So 70% retracement. We're almost tagging that. So optimum trade entry for longs, if you're still long in oil. Gold, we've been calling gold like a stallion here this week. It's down. Look at that. My down oil, or sorry, my down gold, my liquid gold, I've been calling this down all week. So that's my next downside objective for gold. It's 1834. Working like a beast today. Look at that, just ran up, just popped up above there. This high here is 1879.69, and this one here is 1879.89. So 20 cents above that high was all it took, and a full fill of that guy there, because the low there is 1879.87. This one 1879.89. So 2 cents above that fair value gap on the SIBI, a fill, and away we go. Wow. Beautiful. Beautiful. All these people that are trailing their stops down, it ran, took them out, and now it's pushing for lower prices, which we've been calling all damn week. Yeah, look at that. Choppity chop. Heading down. 1834. If we don't get down there this week, that's where we're heading for next week. That's where we're heading next week. All right. Let's go over here to 1 minute. Look at that. Run up. Fill that last little piece of that fair value gap, SIBI. Fill it. And right back into the breaker right here. Right on the breaker. Ding. And off. Lovely, lovely, lovely. Breaking structure. We don't get back into it, we're gone. It really gapped down with intention. So it came back up here to clean these guys out. All these equal highs back here. There's a little pocket of liquidity. Ran up, quickly took them, and did not give anybody else, these guys, a chance to get off. If they didn't take their money out there, they're squeezing them quick now. And they've come down and taken them out. These equal lows are gone. These lows are gone. We've pushed right into that inversion fair value gap again. We banged off of it. Now, are we pulling back into the range? Lots of consolidation. So this was our big hauls for the day. I like those. Return to breaker. Look at that body. Gosh, we're not even watching this. This is why you stay in your your trades, when you pick your, I shouldn't say stay in your trades, but when you pick your asset class that you like to trade, stay in it, because then otherwise you'll miss opportunities like this. Because we're going through 10 different things here. I'm trying to appease all those people that come and look and say, is he talking about my one? So that's a classic example of stay in your lane and see your thing. There's your breaker, beautiful breaker, return to body, 1 2 PD arrays, hits it nicely, and you're aiming for here, and then here. And that, my friends, is precision entry, and that is 42 handles. 42 handles. Love it. Love it, love it, love it. Good. Anyway, let's get back to my friend over there in New Jersey. New Jersey, oh. You need a little Viagra in that, my friend. You need to stiffen up that trade. Let's go. Are you in... Yeah. You need to whisper in the ear this little trade. Get her excited. Start getting her moving. Show her your moves. I think that's going to be it for me today. I wish you all the best, you guys. Thanks for everyone popped in who did pop in. And it was a good trade day today. We had lots of opportunities to get in. We took a couple. Paper trading this looked really good. And we enabled some change out of the market. I like to see that. So thanks for popping in this week. And we will see you guys next week. New Jersey. Who said it? I hope your trade pans out, my friend. You're getting into the lunch hour now, so this is probably going to go sideways for a bit. But look for highs and lows to get taken out after lunch. So your macro for high and low. Look for that run here and then maybe push back up, or run the high and then run back down. So look for that in your lunch hour, or keep aiming for your higher time frame objective. Wish you all the best, and we'll see you guys again next week. Thanks a lot. Have a great weekend. And as Michael says, be safe.